Checking markets real quick because we want to talk about signs of an economic rebound. We are watching the NASDAQ has been in positive territory, but the S&P 500 and Dow are negative, although trying to climb into positive territory. Let's invite into the program Michael Antonelli. He's with Baird PWM Market Strategist, and wanted to ask you about this question of economic rebound. That article in the Wall Street Journal today talked about demand for copper and tin increasing since it bottomed out in the middle of March. Are those reliable signs of economic regrowth? I mean, Dr. Copper is something we all grew up with, but is it still valid?
Yeah, it's great to be back, guys. It's been a while. I'm pleased to see your faces again. So I think it is. I think it is valid. There are certain things that a guy like me would look at to engage with kind of our wealth management and our retail clients, and it would be consumer spending. Are people spending again? TSA checks, are they going back to airports? Hotel occupancy, those kind of real high frequency data points that we're looking at. But also we do look at the industrial metals, or we do look at sort of what would global demand bouncing for industrial metals or for machinery or stuff like that. So I do think that we're in kind of this green shoot stage. I think back in 08, 09, green shoots was how is lending doing? How is home buying doing? Now green shoots is, are people going to the airport, or is copper picking up, or how many cars are on the FDR at noon?
Mike, it's Julie here. How do we figure out sort of how sustainable and real all of that is? Or do we just have to wait and continue to watch the data?
I think it's one of these things where we just have to watch for the direction of the data. I don't think we're looking for outright level. TSA checks, right? We're up to about 500,000 people going through a TSA checkpoint. It's usually 2 to 2.5 million. So still well off its highs, but we're looking for directionality out of this data. We're not looking for outright level just yet. But I do think that if you look at the economic data that traditional strategists and economists look at, it's still kind of broken, right? The continuing claims, the home sales data, it's still kind of just wonky. It's all over the place. So we have to kind of look in other unique places for our consumers inching back to the economy. And what I really want to emphasize is all 50 states have people inching back to the economy at different rates. That's important. What happens in Wisconsin and Montana is different than New York and Florida.
Michael, it's Brian Chung. Then how are markets kind of pricing that in, right? It's kind of difficult in the aggregate to parse that out. Is it money going into certain types of sectors or certain types of geographies versus others? Or are you saying that at large, it's pricing in the risk that because all these states are different, that there is the chance, I guess, if you will, of this virus not getting stamped out?
Yeah, so here's the point I keep trying to make on Twitter. All we talk about is Florida and Arizona and Texas right now. If you looked at the Northeast and the Midwest, all the states in the Northeast and Midwest are declining. The cases are declining. So, we see these surging cases. Everybody jumps on Twitter and says, oh, the market's going to drop. Oh, I'm really nervous. But it doesn't. Futures last night, up. It's a 50-state strategy. We're not going to open the U.S. like a furniture store with a grand opening sign. Each state is different. And the market knows that. And since unfortunately we don't have a national strategy to deal with this, it's got to be state by state. I think the market realizes that. What Dr. Foreman said, the market realizes the demographics of the new cases, and that's why you're not getting this sell-off everybody seems to think will happen as cases spike.
Hi, Michael. It's Julia LaRoche. Great to see you again. I want to talk about the market's up about 40% or so since those March lows, and you've had quite a few big-name hedge fund managers, money managers, some, I'm happy to sit on the sidelines, others who say they've been humbled by the market, and we've seen this huge, run up, if you will. Is it too late for folks? And did some of these folks just miss out altogether now?
Yeah, I always wonder whether or not somebody who killed it in a different era is meant for this era. There's this theory that people can be experts of a different version of the world. It's a great theory. I think it came out within the last decade. And I respect hedge fund managers and I respect their wisdom of the market. But in some cases, and this might be one, this world just isn't built for their style or their strategy. So they end up sitting on the sideline and kind of missing a big bounce. People say that retail's driving this market. It's not. I dealt with institutions for 12 years. I talk to retail investors now. Retail investors might be able to move a small cap or a micro cap because it gets really get talked about or whatever. But institutions move the indices. It's not retail investing. And the amount of stimulus that we've done, what the Fed is doing, that's what's moving markets. The Times has an article today that poverty fell over the past few months because of what the government did with stimulus. So I think some people have missed it. I don't think it's too late. I think an investor's goal, as Howard Marks would say, is to make a series of good buys, not just a few perfect ones.
Michael, very quickly, you mentioned institutions. Fascinating article in Atlantic Magazine, Atlantic Monthly, by Mr. Frank Portnoy. He's an expert in derivatives. Essentially, he's saying, get ready, in about a year, you're going to see losses that are going to create potentially a banking collapse unless the Fed's able to bail out, and the appetite to bail out may not be there. Are investors not paying attention to the potential losses of CLOs and about to get burned?
That's a great question. That guy sounds like he definitely has something to say about the way the market is structured. But, I don't think the lessons of the past will be lost. That's one of the things that people try to bring up all the time. What did we learn from 07, 08? It was, don't let systemic failures happen. Don't let a liquidity crisis happen. Powell put it in instantly when this all happened. So, there will always be pockets of the market people worry about, structured products, stuff like that. I think the Fed will be there to make sure those crises don't go system-wide.
All right. Michael Antonelli is with Baird PWM. You're a market strategist, and we appreciate your being here with us on The Move.
Thanks, guys.